Welcome back. Now let's take a quick look at how this market has certainly been performing today across the board. It's been a mixed picture, but if one has to take a look, the likes of the Hang Seng and the Shanghai Composite have actually been closed off for a public holiday for some time now, with only the Nikkei out in Japan going up 1 2/10% there. So the only real movement out on that front. On to the European market then, a similar mark up for most of the counters there. A big 107-point gain for the DAX out in Germany as well. So positivity across that board. That has certainly filtered onto the South African market, which has gone up, but not as much as all the other counters, particularly out in Europe. That is a 0.25% to the good there, 54,364 points. Some of the biggest gainers there being the industrial counters going up 2/3% there, 1/3% high as well for resources, while gold miners and platinum miners have gone down today. Banking counters have also suffered more than 1% loss there, which has certainly pushed down the financials overall. In terms of entities that have gone down as well, as you can see, the likes of Grindrod falling almost 8% as well then, or rather gaining as much as 8% should I say, while going down the likes of Advitech and even Coronation there in terms of the all share. Onto the commodities board very quickly, 4.1% gain then for that Brent crude price, and that comes as perhaps more hopes of Donald Trump perhaps getting a little bit better and even getting discharged out of hospital today. More policy certainty perhaps returning to the market somewhat, if that happens to be the case as well. A slight fall for platinum, while pretty much flat picture then for gold. In terms of your currencies, strength, but really not too much to write home about on that front for the local currency. 16.42 against the US dollar, it's 19.30 for a euro, 21 rand 24 then for a British pound. Let's have a chat then to, we have over with us here at the Johannesburg Stock Exchange, should I say, Gary Boyson from Arans was joining us. Gary, thank you so much for the time. So it's a bit of a mixed market, but all of this weird movement is probably just Donald Trump, whether he's sick, not, can survive it, is going to get out of hospital. How big an impact does he really have on this market picture?
Yeah, so far it hasn't actually been that large an impact. So we obviously got the news out Friday morning. Everyone was kind of almost anticipating to an extent, but you've had very mixed messages coming out of certainly out of the White House and the doctors over the weekend. But it does seem that he is now looking a little bit stronger, and that's helping, I think, to lift optimism. So you're seeing, strangely, conversely, almost the dollar is actually slightly on the back foot, which is what was pushing up those oil prices and also making the currency a little bit stronger. Yeah. And that's just as people take a little bit more risk and they move back towards emerging markets, as they think we're not going to have an election crisis, and well, at this stage anyway.
Isn't it weird though that you have a man who is known for completely divergent policy, which doesn't create policy certainty, but on him coming back to the market is happy that at least there'll be policy certainty of sorts?
Well, absolutely. What the market doesn't like is uncertainty. Yeah. And yes, Donald Trump has had some very uncertain policies in the past, but just the total change of a candidate, this close to the elections would just throw everyone into a tailspin. And I think also you've got to remember that markets actually prefer Republican candidates. So, if you look at the lead that Biden has at the moment, that is not necessarily market friendly. The policies that the Democrats have had historically are not friendly to markets, no matter what you think of the individual candidates themselves.
Sure. Quite an interesting one. We'll see. November the 3rd it is. We might not know the results of that election for quite some time, judging by how things are faring. All right, let's get into the equity front. There's not really too much to write home about, but some interesting news when it comes to the likes of MultiChoice then. I mean, their stock price going up quite prodigiously as well today, really helped on by UBS by the seams of things, and something else in France, that is, as well.
Yeah, so looking at it, I mean, it's one of the top three gainers today, up over 8% at the moment. And this is, as you mentioned, so there is, it was kind of a strange one. So we actually had UBS downgrading this, or at least, I suppose moderating its forecast, if you want to put it that way. Yeah. But there has been an announcement today that Canal Plus, I think is how you say it, the French term, which is obviously, it's a multinational pay TV conglomerate from France. Has taken a 6.5% stake in the business. Now that I think has gotten everyone quite excited because you look at it, they essentially control most of the francophone countries in Africa, and I think with them starting to buy a stake in MultiChoice, that just it again brings to light that, or at least reminds me of the time kind of around 2000, maybe 2010, when South Africa was going to be a springboard into Africa, and maybe that is what this company is seeing. They're seeing MultiChoice, and they're seeing just their their ability to deploy into Africa, especially into English-speaking nations, and they're seeing an opportunity there, which I think is very exciting for the stock.
Yeah.
The biggest holder is still the Public Investment Corporation in MultiChoice, but as I said, that UBS target's actually being decreased on Friday, so I think they were sitting about 123 rand a stock, and they actually dipped it to, I think it was 118 rand a stock.
Yeah. So, and now sitting at 110 rand a share.
And it's 8% up and at 110 rand.
Yeah.
So even while they were downgrading, their forecast for the stock price is a lot higher than where it is now.
Sure. I think it's going to get interesting, and just on another total, maybe slightly different front. I mean, with Canal Plus joining in, you begin to think that, especially with the rugby situation South Africa sort of faces themselves in, we may actually have to play our rugby with the European nations more than with the Southern Hemisphere nations, and that kind of adds a little bit to it, I suppose. We'll see how things fare. But UBS still continues to be sort of a headline newsmaker, if you will, at this point. So they decided to upgrade their outlook on another share price.
Yeah, so looking at UBS, that would have been Richemont.
Yeah.
They cover Richemont, so it's interesting. Richemont's trading around, I think it's about 62 francs a share at the moment if you look on the Swiss board.
Sure.
They've actually upgraded their target from 57.3 up to 57, 57.3 up to 57.7. So not a huge upgrade, and still an upgrade below where the stock is trading.
Sure.
But the luxury goods space, I think, if you look at the general analyst consensus across Richemont, most people have a hold on the stock at the moment. So, a lot of these companies have been hit hard by the pandemic. So, you just have to look across the other companies in the sector, with the likes of Tiffany and LVMH.
Yeah.
They had a huge merger that was meant to go through by, I think it was the 24th of November, that they've sort of stepped away from, just because Tiffany is absolutely, their financial results have just imploded, given the lockdowns and given the reduction in, I suppose, luxury goods spending. And now also, I suppose, a French story. The French government now coming out and saying to LVMH that in light of the tariffs that the US could potentially impose on the company, they would like them to take a step back from the deal. And now both companies countersuing each other. So a lot going on in the luxury goods space at the moment.
Sure, certainly gets very interesting out there. Do you think people get back into that market though? I mean, considering that they've had a rough 2020, of course, but the likes of China getting back into that market, and a lot of people travel to try and get all that luxury goods.
Absolutely. So if you look at the luxury goods space, traditionally, it's meant to be a very defensive sector. You look at the uber wealthy that are going and buying Mont Blanc watches, or at least Mont Blanc pens, and Cartier. And
please.
They're not meant to feel an economic downturn the same way as the rest of the world feels it. So it's meant to be a very defensive sector, but obviously when you get something like COVID-19, which has just been so strange in the way that it's played itself out, where you've shut down all airports, which is where many of these outlets are, where as business travelers go through, there's the whole idea of the Chinese gifting culture in business as well. But as they move through airports, with airports shut down, those outlets essentially aren't selling. So, as I said, we've seen it in some of the other players. Richemont's share price has been pretty stable around on the local exchange 110. Even given a much stronger rand, because remember, this is a rand hedge as well.
Yeah. All right. Gary, thank you. Appreciate it. Always good chatting to you. Up to 0.10% then is still the market picture right now, as you can tell on the JSE All Shares, still above that 54,000 point mark. That is where the market sort of look for now during this midday trading picture. We're going to take a short ad break then, and when we come back, we'll give you more local news. Back right after this.